Hello students, welcome to Dr. B.R. Ambedkar Open University, Hyderabad. Myself Dr. Nagendra. In the previous session we discussed part 1 of standard costing and variance analysis, where we covered what is historical cost accounting, what is standard cost, standard costing, what is the difference between a standard cost and a target cost, and what is the difference between a standard cost and an estimated cost, and what are the advantages and limitations of standard costing, and what is the process of setting up the standard cost. In this session we are going to step ahead and we are trying to understand the process of how to analyze the variations in the standard cost in comparison with the actual. In the previous session, as I already said, we covered all these topics, and now we are going to discuss about the calculation of variance analysis. So now before we are going to analyze the variance analysis, we need to understand how to establish a system of standard costing. So the system of standard costing can be established in the 5 stages. The first stage is the determination of cost centers, and the second stage is the classification of accounts, and the third stage is the types of standards that can be determined, and the third stage is organization for the standard costing, and the last stage is standard setting of standards. What is cost center? We already discussed in the previous session what is meant by a cost center. A cost center is nothing but a unit of production where a specific product is manufactured, or a unit of business unit in a business organization where a particular service is provided. So for the manufacturing any service or manufacturing of any product, for the rendering of any service, we will be incurring expenses, and all these areas where particular types of expenses are incurred and the output will be generated in the form of a product or in the form of a service, it can be termed as a cost center. Normally the process of standard costing will be applicable to different cost center where the costs are going to play a major role in any business operation, especially in the production operations. And the next stage is the classification of accounts. Classification of accounts is nothing but what are various types of transactions happening in that particular cost center. So when we take from the standard costing perspective, a cost center normally is a production unit. It may be production of a service, or it may be production of a product, or it may be execution of a service. So for the production of any product or for the execution of any service, normally what are various types of transactions that are involved. In the parlance of standard costing, the basic levels of accounts are mostly related to materials, labor, and other overheads. Broadly speaking, the overheads can be like administrative overheads or selling and distribution overheads. So like this, broadly the accounts can be classified as material expenditure or labor expenditure, or overheads like administrative overheads or selling and distribution overheads. Also they can be classified as direct and indirect expenses or direct and indirect type of accounts also. And the next one is, we need to understand what are different types of standards that can be used in the standard costing. And there are broadly 3 types of standard. One is current standard, and the second one is basic standard, and the next one is normal standard. What is a current standard? Current standard is nothing but what we are going to determine at the present level. So there will be 2 types of current standards are there. One is ideal standard and another one is the expected standard. What is ideal standard? So when we are going to determine the price or cost of a material or labor or any other overheads, so we need to understand what can be the ultimate level of maintaining a particular cost. So that is called as ideal standard. Say for example, you are manufacturing a toothpaste, which we discussed in the earlier session. If we are going to determine the standard cost, so as per the perception of the manager, if he determines a standard like ₹5, and with respect to this, if you want to understand what is meant by an ideal standard means, so this is the perception of the manager in the current case to fix ₹5 as the current standard, and the maximum level of standard that can be maintained may be around 5 or 6, which cannot be beyond that. So anything can be maintained within the permissible level. It is called as ideal standard with respect to that particular manufacturing of that particular product or provision of particular service. What is an expected standard? See, standard cost I may determine based upon my expenditure or based upon my experience, or based upon available market determined by the market factors. So what is meant by an expected standard? Once after determining a standard, so we have ideal standard, that is a specific level up to where we can maintain that standard, and the expected standard may be between your standard cost and the ideal standard. So it may be varying between any of those expected standard, which will be normally an actual standard that we are expected to be achieved. What is meant by the basic standard? So basic standard means, for example, today maybe I am fixing a standard of, for example, today I fixed a ₹5 for the manufacturing of toothpaste for the material as a material cost. So normally that ₹5 may be my perception, but generally as per the industry standards, so we can say that ₹6 may be the basic standard. That means anything cannot be come below the ₹6. So that is called as basic standard, a standard which is existing for a longer period of time and which is the basis for the standard cost of that particular material is called as the basic standard. Then what is meant by normal standard? Normal standard is the ultimate standard. Ultimate standard means, for example, it is in comparison with the ideal standard. As I already mentioned you that, for example, if the ideal standard is ₹7, anything cannot go beyond that. So in this case, the highest standard may be above, cannot be more than 7. So for example, here the basic standard I consider as ₹6, and the normal standard may be 6.5, which cannot be never beyond ₹6.5. So that is the normal standard. So before we are going to implement the standard costing system, we need to understand what are different types of cost center that are there in the organization, and how different accounts or different transactions are classified in the each cost center, and what kind of standards are there in existing, and how we can fix up our standard cost based upon the consideration of ideal standard, expected standards, and the basic standard or normal standard norms. So by understanding these things, we can fix up our standard cost for each component of production or manufacturing activity, mostly classified broadly as materials, labor, and other overhead. Organization for standard costing. Now organization for standard costing is nothing but establishment of that particular system, establishment of particular structure for the assessment of the standard cost. So for a specific cost center, each cost center will be having different types of standard costing procedures. It is nothing but how you are going to evaluate the standard cost for each unit of manufacturing a product or service. So it consisting of different peoples with different expertise, with different knowledge, and also it will gives you a picture of what happened earlier. So all these things will be taken into consideration, and how the cost can be determined for a particular cost center will be considered for under organization of standard costing. It's a institutional structure, or it's a systematic process where we can determine the cost of any particular material or particular labor one. Setting of standard, and the final one is that to determine the standard. Standard is nothing but the cost that we are expected to be incurred in a standard with respect to the manufacturing of a particular product. So the standards will be set in the final stage. So these are all 5 preliminary stages that we need to understand for the establishment of a standard costing system in a organization. So before going to that, as I already mentioned that broadly the expenditures can be classified into 3 categories: standard cost for the direct material, standard cost for the labor, direct labor, and standard cost for overheads. How to measure the cost? The measurement of cost for a direct material is simply nothing but determining the quantity of raw material that we are going to be used for the manufacturing of that product, and also price per each unit of the material. If we multiply the quantity with the price, we will get the standard cost of direct material. Similarly, with respect to the labor, how much hour the labor is expected to work, and also what is the labor cost per 1 hour. If we multiply the labor hour with the labor cost per 1 hour, we will get the total standard cost of direct labor. What are standard cost of overheads? I already mentioned overheads are nothing but administration related or selling and distribution related. So once after determining those overheads on the total, how the unit cost can be determined? The unit cost of a overhead can be determined depending upon the number of labor hours or number of units manufactured. So the total overheads can be divided by the labor hours or the units manufactured, so that we will get the unit cost of overheads. So these are some basic things that we need to understand before we are establishing our standard cost accounting system in the business organization. So the three components plays a very important role. And one more important concept is standard hour. What is standard hour? Why we need to take standard hour into consideration in the standard costing system? See, for example, we will be manufacturing different types of products, and the unit of measurement may be different for different types of products. It may be kilos, or it may be measured in tons, or it may be measured in gallons, or it may be measured in pounds, or it may be measured in liters. So the quantity of the product may be different. It may be keep varying, and if the system is in larger scale, and if you want to produce the things in a larger scale, determining unit cost or determining the unit of any particular product when you are doing different types of manufacturing activities in different products, so then unit cost measuring will be different. So to overcome the difficulty and to bring all the production cost into one uniform framework, so the standard hour technique will be used. If standard hour technique can be used, this technique will take into consideration the number of production hours that will be take for a production of particular unit. Instead of taking the quantity into consideration of each product that we are manufacturing, we can take how many hours a product is taking for the manufacturing. So out in the total, so like that we can calculate the total hours for the manufacturing of any product, whether it can be in kilos, or whether it can be in tons, or whether it can be in gallons, or whether it can be in pounds, or whether it can be in liters. So whatever it may be, if you take how many hours it takes to manufacturing of this particular product, and then we can measure the rate, we can take the total cost of that, and then we can calculate it per hour. So the standard hour rate will be helpful irrespective of diversity in your nature of the quantities that we are manufacturing. This standard hour will help you to as a standard measure to estimate the cost of manufacturing a particular product. So here is a definition from Cost and Works Accountant. London defines a standard hour as a hypothetical hour representing the amount of work which should be performed in an hour under the standard condition. So we are expecting certain amount of work to be done within a particular period of time. So how much amount of work can be done within one particular hour? This is an hypothetical hour, means that hour can be anything of your understanding of the production process. So depending upon the amount of length of the production process, we can determine the hour, standard hour. So accordingly we can determine the rate at which the work can be executed per the hour. So like that the standard hour can be measured for a particular type of product, and it serves as a common basis of measurement for any type of products, irrespective of diversity in the nature of their quantity produced. The standard hour is a measurement of work content in 1 hour. The quantum of work done in 1 hour is known as standard hour. So this is all about standard hour, and which can be serve as a standard unit of measurement in the standard costing process. So now we came to the key point of variance of analysis of variance. So all the objective of standard costing accounting is about analysis of variance. So we will be determining the standard cost for each unit of product or each unit of service that is provided by the produced or provided by the manufacturing unit. Once after determining the standard cost, the next thing is to find out how they are varying with respect to your actual performance. So the objective of standard costing is to exercise cost control and cost reduction, as we already discussed. The performance target with actual performance will enable a control system. So we will be setting certain performance targets, and with respect to our actual performance, we will try to execute our control system. We will try to make a balance between our expected outcomes and the actual outcome, and we will take suitable decision by following the technique of management by exception, where the management can involve into taking the decisions where certain things are going against the standards already determined. So the standards of variation may be with respect to cost, or it may be with respect to profit, or maybe with respect to the sales. So the overall objective is to analyze the variation between basic component of production activities, which we consider as materials, labor and overheads, or sales, or it can be a profit. So we'll try to understand how this variance analysis will be done for different types of components in the production process. The variances may be favorable or unfavorable. So this also we already discussed in the previous classes about a variance can be favorable or it can be unfavorable. If the actual cost is less than the standard cost and the actual profit on sales are more than the standard profit and sales, then the variances are said to be favorable. That means whatever the standards that we determine with respect to the cost, and if actual costs are less than that, then it is a favorable one. And with respect to the profits, if your profits are more and sales are more with respect to the standards, then it can be considered as a favorable standards. And contrary to this, or vice versa to this, is if your actual costs are more than the standard cost, and if your actual profits and sales are less than what you are planned, then it is said to be an unfavorable circumstances. So the variance are related to efficiency. If the variances are favorable, it will show the efficiency. If the variances are not favorable, it shows the inefficiency of your manufacturing or production activities or planned activities. Hence, it will initiate the management to take the necessary steps. So management by exception, what we discussed, will help you to take suitable course of action to address the deviations that were happening and which are within your limits. So this will, all the process will help you to understand how to take the suitable decisions. Classification of variance procedure for solving practical problems. As I already told, broadly the production activities are classified into four major variances: material variances, labor variances, overhead cost variances, sales or profit variances. So where we will determine the standards, we can determine the standards with respect to the materials. We need to find out the material cost variances because this is one of the key component, and as well as a labor and as well as overhead cost variances, and also sales and profit variance. So this we need to determine. So under standard costing technique, we are having sufficient formulas to understand how the variances will be occurring with respect to the materials and with respect to the labor and also with respect to the other overheads. So going by, we will try to discuss about each component of variance analysis. So first we try to understand direct material variances. What is direct materials variances? Direct material variances can also be called as direct cost, material cost variances also. It is with respect to the variations of cost with respect to the materials used in the production process or manufacturing process. So how the actual costs are varying with respect to the standard material cost. So this material cost variances can be calculated by using two components. That is material price variance, where we will try to find out the cost, total cost, how the total cost is varied with respect to the material price variance. That is per unit material, change in per unit material cost of the price, how the total cost has been changed, and also how the material cost has been varied with respect to usage of the amount of quantity of the raw materials. So further, the material usage variance can also be subdivided into material variance and material mix variance and material yield variance. So to understand the actual total cost variance of with respect to the material, we need to understand what is actual material price variance and what is material usage variance. We have formulas for the calculation of material price variance, and as well as we have formulas for calculating material usage variance and mix variance and yield variance. So we'll try to understand by using an example, we'll try to understand how the material variances can be calculated. So first one, material cost variance. So the material cost variance can be calculated by the formula, by using the formula standard material cost minus actual material cost. So what is standard material cost? Standard material cost is nothing but what is the actual standard amount of quantity that you wanted to use and what is the standard price you wanted to purchase that quantity. So that is the standard price per unit of raw material. So to measure the standard material cost, we have to multiply the standard price that you fixed for that unit of raw material and also the standard quantity that you want to use for the manufacture that particular product. So by multiplying these things, you will get the standard material cost. And on the actual thing, once you fixed up the standard things, we need to understand what will be the actual price and then what will be the actual quantity that you are going to use. So for example, for toothpaste, I fixed a particular standard, and then if it is some 10 kgs of standard I wanted to use for a making of 100 tubes of toothpaste, but the actual quantity may be more than what I fixed up. So similarly, the actual price, if I am fixing that per kg 2 rupees, if it may be more than 2 rupees or it may be less than 2 rupees. So the actual price may be different. So like that, we have to measure the standard material cost and then actual material cost. With that, we can understand what is the total cost variance with respect to the materials. this can be, the material cost variance can be further subdivided into two components. So we can measure, see the earlier formula will gives you a mix of both price and quantity, so that we will get the total material cost variance. But it is a functioning of that material price it can be a function of material price variance, or it can be a function of material usage variance. Price variance individually we can calculate. Price variance is nothing but what is the variation with respect to the standard price, and what is the variation with respect to the actual price with respect to the total quantity. It gives you the price variance. So we fixed up certain price and then we incurred certain price. So there is a variation with respect to the price, and with respect that can be measured with respect to the actual quantity. So material price variance formula is actual quantity into standard price minus actual price. After material price variance, the another component is material usage variance. Material usage variance also is nothing but I fixed certain quantity of raw material to be brought, but the actual quantity may be different. And then if you measure with respect to the standard price, we can get the variation with respect to the material usage variance. So the material cost variance can be calculated as a function of material price variances and material usage variance. When you calculate on a broader level the material cost variance by using the formula, we can also determine with respect to the functioning of material price variance and material usage variance, so that the material cost variance will always be equal to the change in the price variation and change in the usage variation. So we will try to understand this with an example. So here one example is there. Following is the data of a manufacturing concern. From the figure below, we need to calculate material cost variance, material price variance, and material usage variance. See, I gave you the formulas earlier. What is the formulas for material cost variance? It is nothing but standard cost minus actual cost. How the standard cost can be calculated? Standard cost can be calculated by using standard quantity into standard price for that material, and the actual cost can be measured by using actual quantity plus actual quantity into actual price for that particular material. So the difference between both the standard cost and the actual cost will give you the material cost variance, and the price variances we can calculate as a difference between the actual price and the standard price, and also with respect to the actual output that we are using. And material usage variance can be calculated as a change in the variation of standard quantity and with respect to the standard price that we are set for the manufacturing of that particular product. Here in this problem, we try to understand the standard quantity of material required for producing 1 ton of output is 40 units. So the standard quantity is 40 units. 1 ton unit of output. For producing 1 ton unit of output, we are using 40 units. The standard price of per unit of material is 3 rupees. So during a particular period, the output is 90 tons of output was undertaken. That means I fixed standard output as 40 units and the standard price as 3 rupees. So now the standard cost can be measured as 40 into 30. So that is 120 rupees. During a particular period, 90 tons of output was taken. The material required for the actual production is 40 tons, 4,000 units. Okay. 4,000. So they gave the total cost, they gave the total number of units. So for 1 unit we are using 40, for 1 ton we are using 40 units, and then the unit cost is 3 rupees. The actual material required is 400 units, 4,000 units we required, and also the total amount is 14,000 rupees. So using this we need to calculate material cost variance and material price variance and material usage variance. So per 1 unit 40 tons are required. For 1 ton manufacturing we required 40 units of product, and that means total we need 3,600 units. So standard quantity of material that we required for the manufacturing of 1 unit is 40 units. So if we have to multiply with the standard output, so we will give getting 3,600 units. See, for example, in the question it was given as for 1 ton we are requiring 40 units. Similarly, if you want to measure 90 tons, what will be our standard thing? That is 90 into 40. This is what standardly we are estimating, right? So if you estimate that, it is 3,600 units. 3,600 units is the standard quantity of material that you require, and the standard price is 3 rupees. standard price per unit is rupees 3. But actually what happened, we produced 90 units and for that we used 4000 units. That means we have to calculate the per unit cost as 14,000 by 4,000, that is 3.5. So we got material actual price per unit is 3.5. So the standard units are 3,600, the standard price is rupees 3 and the actual price is 3.5 and the actual units are 4,000. So we can calculate the material. Now the standard cost is nothing but 3,600 into 3, that is 10,800, and the actual cost is 14,000 rupees. So the difference is 3,200 adverse. So we incurred more than what we planned. So the standard cost variance is 3,200 adverse. So now I told you that the material cost variance is a function of price variance and the usage variance. That means the sum of the difference between the price variance and usage variance should be equal to the total material cost variance. So now try to understand that in the price variance. The price variance formula is actual quantity is 4,000 units and the difference is standard price and actual price difference is 0.5, then it is 2,000 adverse, and the usage variance is standard price per unit is rupees 3, standard quantity is 3,600 and the actual quantity is 4,000. So the difference is 4,000 units. So here it is rupees 1,200 adverse. So the material price variance and material usage variance to sum up together, it is equivalent to 3,200 adverse. So I already mentioned that the material cost variance is equal to 3,200 and it is a function of material price variance and it is a function of material usage variance. So if you take as a function, that whole thing as a function, that is material cost variance is equal to material price variance plus material usage variance, both the components should be equal. So this will help you to understand how this mechanism works. So material cost variance is finally shows that material price variance plus material usage variance. So the material cost variance, we can see that minus 3,200, it is equal to minus 2,000 plus minus 1,200, that is equivalent to minus 3,200. So this is how we can calculate the material price variance and it will help you to analyze where the problem is existing. Say let us see that you fixed up your standard price as 3 rupees and your standard units as 3,600. So you can see that variation, with respect to both in terms of number of units and with respect to actual price. So both are varied. Quantity increased and as well as price is increased. So hence we can see that there is an adverse thing that happened with respect to your material cost variance. So hence you need to take a decision with respect to either reducing your cost per unit or whether you can reduce your number of units that can be manufactured so that you can able to improve your efficiency. So this is about material cost variances. In the coming sessions we can discuss about material labor variances and then overhead variances, sales and profit variances also. Thank you.